Hey guys, how are you? Andy Sukhu, founder and CEO of Y2K Credit Solutions. So today I have an interesting topic I want to speak to you guys about. It's actually a good topic too, because a lot of us are going through it. One second here. A lot of us are going through that situation now. 50% of us, 50% of you guys that are watching this video probably already went through the situation. 50% of you guys are not going through the situation. And the topic is divorce. When you're getting divorced and you have joint debt, what happens in the divorce proceedings, I should say, right? Supersede is going to be the word we're going to talk about today, and we're going to talk about a myth that everyone thinks what happens, but really doesn't happen. So now, when you get a divorce, you see this more on not so much on credit card debts, but more so on auto loans, mortgages, student loans, right? Now, credit card, anyone can get a credit card, but certain loans like a mortgage, auto loan, student loans, you may have to be a co-signer. So in this finance industry, it's called obligor or co-obligor, right? So either you're the obligor, and this is your responsibility. You're either an obligor or co-obligor of this debt. Now, when you're getting a mortgage, a student loan, an auto loan, the person that's applying for you may need a co-signer because the data on the credit report may not be strong enough. The credit score may not be strong enough. You may have some derogatories on your credit. I couldn't get you to approve for this loan on your own, so you need to get a co-signer, right? But now, when you get a divorce, the myth is everyone thinks that the divorce paperwork, the final paperwork, separates you from the debts, right? So when you go to the divorce, they can say, okay, well, the husband gets to keep the car, he makes the payment, but the wife is a joint signer on it. Or the wife keeps the house, she makes the payment, but the husband is a joint signer on it, right? So whoever is responsible for whatever debt, however you guys divvy up the debt and you divide it, and you're responsible for this and he's responsible for that, or vice versa, however you want to look at it. If you get the car, you're responsible to make the payments, but it's still affecting the wife's credit and her debt to income ratio, right? Now, the myth is that the divorce paperwork splits the debt. It takes your responsibility, and it takes your responsibility away from it. And I'm here to tell you, no, that is not true. The divorce paperwork does not supersede the original promissory note you have with that creditor when you open that debt, or when you open that loan, or that that mortgage or auto loan or student loan, whatever it is that you opened up jointly. The divorce paper does not supersede that promissory note. All right, let's get that straight. Now, and here's the thing, it's easier to divorce your wife or your partner or your husband, however you want to look at it, than it is to divorce your debt. So you always want to make sure, think twice before you co-sign with someone on a loan, right? Because you're equally responsible. So if that, for example, now let's use a car. Let's say husband and wife got a car, they got divorced. The court says, okay, the husband is going to keep the car. He's going to make the payments. But it does not remove the wife's obligation. She is still a co-obligor, right? So if the husband misses a payment, it's going to affect his credit and the wife's credit. The debt, the loan of the car, the amount is going to affect not only the husband's debt to income ratio, but the wife's debt to income ratio. So whatever the husband does is going to travel over to the wife because she's the co-applicant, co-obligor of this debt, okay? Vice versa, put yourself in your shoes. If the wife got the house, she has to make the mortgage payment, the husband is still responsible for the mortgage. It's still going to report to his credit. So whatever she does is going to travel over to his credit, right? Now, how do you fix that? When you get divorced, you got to make sure both parties have good credit. Because now, let's say it's a car. The husband will have to go to a bank, refi the car out of the wife's name, and put it into his name 100%. Vice versa, same thing for the mortgage. If the husband's on the mortgage and he wants to be off the mortgage, the wife's gonna have to make sure she has good credit. She's gonna have to go to a bank, refi the mortgage, take the husband off so he can completely be dissolved from the responsibility of the loan. If you have any questions about this topic, leave a comment below. I'll try to answer it to you guys. I'll talk to you guys soon, but once again, think twice before you co-sign on a debt for someone. Credit cards are okay, they're minor, right? But an auto loan, that's a 72-month loan. Mortgage, 360 years. Student loan, that's a lifetime debt, right? So think twice. Again, if you have any questions, leave a comment below and I'll try to answer it for you guys. Talk to you soon.